0. Greetings, everybody. This is Jeff Scott, and welcome to this week's HGSI top-down review with Jeffrey Scott, HGSI Doc. Here's my email address, hgsidoc@gmail.com. It is March 8th, 2015, and it's sometime after 4 p.m., so the futures are not open yet. I've titled today, Will Resistance Act as Support? As I will show you that the relatively quick and brisk sell-off from midweek on has brought us very close to what has been resistance in the past and hopefully will act as support. If not, then we may have some rough times ahead. Disclaimer, as always, this is for educational purposes only. Any recommendations I make are in the spirit of education and not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I am not affiliated with any software vendors or trading companies. The tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools that I demonstrate. Most importantly, trading involves risk, and you alone are solely responsible for any investment decisions you make. I will not spend much time on this slide except to say that I believe that it's your responsibility to become your own guru. Now, to me, that means find smart people whose ideas, whose style you feel is appropriate for your portfolio, and then not just to emulate them, but to learn from them, figure out the things that they do that make sense, and then build your own style from the best of. And the way I've looked at it from my perspective, I've tried to build a portfolio with the best, or build a trading style rather, based upon canceling with O'Neill, Morales and Catcher, his disciples, Ian Woodward and Ron Brown, who took canceling and made it electronic long before MarketSmith, and with the help of George Roberts and HGSI, really created a great tool, regardless of whether you're a canceling investor or not. Alexander Elder, who once again I had a chance to meet with and go out to dinner with in New York at the Traders Expo, my buddy John Person, and Van Tharp Position Sizing, and then here's George Lee, my partner in crime in our educational programs and a great trader by his own self. I have a lot of programs. You might be able to count the icons as I flip around today. Just kidding. But I don't use everything on my day-to-day trading. If you were to catch me during the day, you'd probably see 3 screens running, one with TradeStation, one with Thinkorswim, and one with Genesis. I'm doing some neat things with eSignal, but I'm not sure how long eSignal is going to stay in my repertoire. TradeStation has radar screen, which allows me to scan real-time 1,000 symbols at a time in various time frames. Thinkorswim, its strength is its scanner during the day. Plus, I like its trading interface. And then Genesis Trade Navigator does a great job, in my opinion, from a all-in-one inclusive charting program, but it's expensive, and I recognize that most people don't own it. It's interesting, though, as I sit through Traders Expo and I list all the, quote, giants, unquote, most of them use Genesis as their platform of choice. If you look at me after hours, in addition to those platforms, you'll see me using HGSI, which now that it has live updates during the day, I'm using more as an intraday tool. On the VectorVest side, especially Options Pro, which is Tom Joseph's of Advanced Get Fame's latest creation, EdgeRater, and then for seasonal analysis, I used to use Magenta Trader and Best Choice. There's a new program called Seasonality Trader, which is basically based upon the old Magenta Trader and up and running, and for ex-Magenta users, it still has your old work if you want to resuscitate it. And, we'll see what happens with Magenta Trader as Derek's trying to recreate it as a website. And then I use a number of other websites as well. I always look at this and wonder, where are we? And, every time I feel that we're about where this red line is and about to start our downtrend, the downtrend doesn't occur. But, eventually we are going to get that setback in the market. And part of me thinks it might be starting now. That said, I do think we're very close to a bounce, although we'll see whether that bounce goes to new highs or if it's just a delay in an ultimate bigger fall. Now, where we are in the market will help me decide. Now, I should have put up at the top that cash. And what do I do in periods of uncertainty? Well, I think there are different ways of handling it. And for example, let me just see if I can do something here, if it'll work. I mean, there are things that I might include right here. I might do into cash. I might do smaller positions. I need shorter time frame. And these are things that I might consider as we get up here where we are in this market as we get closer to a top. Market thoughts. March started off weak after reaching new highs in February. We are approaching support on the major indexes, which I will show you. Clearly have narrowing leadership. Interest rate rising as professionals and others bet on a Fed rate increase sooner than later. Dollar strength continues. That's now becoming an old story. The winners of the week, biotech and specialty pharma. Think Horizon, for example. Think Juno. But as I look, they're getting much more selective. Finance, one of the big winners of a strong dollar and rising rates will be regional banks, and they are across the board were up this week. Asset managers and brokers were strong. Big banks were varied based upon how they handled the stress test. Losers, anybody that's interest rate sensitive. REITs, utilities, MLPs, and I should have included, besides pizza, but a lot of the oil, especially the services side. Now, what's interesting is I looked at about 700 charts today, and typically I see a wide range of different products. What was really missing this time were the energy names, both from the services or the exploration, which means they didn't make it to my top 700 list, which just tells you some of the weakness. The MLPs, a little different. They're more interest rate play. They were weak. And then the other thing is I look at places to start shorting some of these restaurants, especially the pizza chains, and I don't really know what's new and innovative in pizza. But some of these look really toppy, and several have started to run over. Don't forget, you need to know your news and your earnings dates. So we have a number of things coming out. Mortgages may affect housing, which, by the way, builders looked weak. Initial and continuous claims for March 12th. You saw what happened on the final February numbers, which were strong. That's what led to the sell-off in the market as concerns of interest rates increases came up. PPI has been relatively quiet and not an issue. And Michigan sentiment, when that rolls over, that will be early sign of a potential bear. We're getting near the end of the earnings season, so you could see here what's coming up this week. Beta, a darling of last year, really having a tough time this year. Quihu is another one. Just looking through, it's everybody's responsibility, obviously, to know when their earning rates are. And clearly, we've seen a period of time where good earnings are being rewarded and bad earnings are being slammed. And much of the seasonality, which I'm such a big fan of, in reality, is more earnings driven than anything else. And knowing when those earnings come out is a big part of the battle. I will be at this meeting. Hopefully I'll have a chance to do some presentation. I think I'll be doing the presentation where I look and find my favorite trade. Elder calls it his A trade, and I'll be talking about what tools I use to find my favorite trade, and then some of the stop management and money management that I use. This is March 28th to the 30th. I know there's still seats available at $12.75 for 3 days of education and lots of food. It's a bargain. Hope to see you in PV. All right, so first thing I'd like to do is to very quickly review the market with my EdgeRater and HGSI tools. Now, I didn't do a weekend review last week, and frankly, I was a bad boy. I didn't even do my usual mega chart review because I was at the Traders Expo. So I thought instead of reviewing my picks for last week, since I really didn't have any, let's look at some of the spiders and some of the major indexes. So the first thing is for the week ending last week. So the left column will be 5 days, 227 to 36. The right grouping will be the last 1 day. And you could see for the week, most of the sectors and most of the indexes were down. Gasoline was down nearly 5%. Gold was down 3.7%. Small caps were down 1.8 on the S&P. On the Russell, they were down 1.3. The NASDAQ was down 0.73. All the stock indexes for the week were down. What was up was volatility up 14%, the dollar up close to 1%, and oil was actually up a bit, even though gasoline was down. From the one-day performance, you could see the only thing that was up was volatility in the dollar, and gold was down nearly 3% on Friday. Utilities were down 3%, oil 2.5%, and TLT bonds were down 2%, silver down 2%. So strong dollar, no surprise on the gold and the silver. Interest rates rising, no surprise then to see the TLT taking a big fall. It was down 4.66 on the week. When I look at strength from an industries last week, biotech, banks, regional banks, and pharma, what I talked about earlier. If you look at just Friday, it narrowed even more to just regional banking. So this was really a bad week. It didn't feel like such a bad week. It's probably because I have a fair amount of biotech in my portfolio. When I ran the numbers, I was a bit surprised how bad the week was. Now, how bad was Friday? Believe it or not, Friday was almost bad enough to trigger in Hindenburg. If you remember on the Hindenburg, I have to have new highs and new lows, both above 2.2%, a rising moving average, so the NYC is still going up, but the McClellan goes negative, and the new highs can't be more than twice the new lows. So if you meet these four criteria, you trigger a Hindenburg, and we trigger 3. Now, I've started spending some time with the folks at Lowry Research, and they have a NYSE version that only looks at operating companies. And they've actually analyzed the Hindenburg, and I don't want to paraphrase too much, but analyzed the Hindenburg and other indicators that are NYSE dependent, and running their version of the NYSE with the operating companies actually starts to clean up the signals, and where we thought we would have seen in Hindenburg, perhaps maybe we would see them if we actually look at a index of only operating companies. Shouldn't be that difficult to create. You take out the preferred shares and the bond shares and be left with those traditional companies that are actually are in business and not just managing bond funds. So that might be an exercise that we undertake. But 3 out of 4 true, and you could see we're very close. We're 1.6 and 1.8 on the new highs and new lows. They both need to be above 2.2 for us to get there. And notice that the new lows have come up while the new highs have dropped. Bucketology, boy, what a difference a week or two makes. We're down to 66% of the stocks below the mid-range on the S&P 1500, below the mid-range of the Bollinger Band, and now 19% of them are below the lower band, getting to a point where historically we might expect a bounce. Now, what's interesting is if you take the first date, which was February 3rd, of when we went above 50% or went above 70% of the stocks above 50% on the S&P 1500, we had about 20 days of positive before we dropped down below or got to the 50% level this week. So we had a very nice run. If you look at the major markets using EdgeRater, you can see the Woody indicator was green up until Tuesday, Wednesday, Thursday, and Friday. Now the first two, which are the IUX and the NASDAQ, are actually held up better than the rest of the indices. And you could see a series here of kahunas. And, you know, if you look back in the past, what's ended a lot of strong markets has been a series of kahunas to the downside. Now, you can get one set of kahunas and still keep going, but you better see kahunas to the upside quickly, as we saw here, or be prepared for this market to further pull back. I run a bunch of different setups, and actually I ran George Lee looking for bearish signals, as I did Morales and Katcher, and my own pivot model that I'm working with John on. And a lot of those financial interest rate sensitive stocks and REITs come to the top as being bad. If one looks at seasonality, there are a number of things that have great seasonality right now. And you could look here, Williams & Sonoma, that's one whose earnings are coming out this week. 12 years in a row up, average return 13%. 12-0 on Vico, Macy's, you could see. So these top stocks are stocks that are very strong over the next month in seasonality. GameStop is one whose earnings are coming out, 11 out of 12 positive, 17%. Now remember, on the seasonality, the message here is not that they're one-day wonders and that you get the whole return over one day. I think sometimes I've been perhaps too zealous on that. And what's more important is to recognize that it's measuring the movement over a 1 month period or whatever we select. So if we look at, for example, last week or 2 weeks ago, I talked about GTLS. And GTLS, this was a projected move, has had a very nice move up. And we were looking for about 16%. And we got that on the day that earnings came out, which is where my crosshairs are. So although it'd be nice to expect to get that kind of a move every time, that's not what I anticipate. What I anticipate is going to be that over a period of 30 days, I might see a benefit. Now, in the setting of GTLS, I got it right away here with that one-day move, but it's continued to run. We're here now, it's pulled back a couple of days, and I actually got out of it already. So I got my expected move on GTLS. Let me turn that thing off. So one of the ones that I mentioned is GameStop. This is one I'm looking at. And if I look at GameStop, GME, what I see is a stock here. Let me just bring this up, which has been in a tight pattern, which is great. It's at the top of the channel. I'd rather buy it at the bottom of the channel. And you could see here that in green and in yellow, the yellow being the 10 years of data, the green being in the 5 years worth of data, we're going into a very strong part. In fact, if over the last 10 years you would have bought GameStop on March 11th and sold it on April 21st, so that's about a little bit over maybe 30 trading days, you'd have been up 9 times out of 10 with a 21% return. Now, the beautiful thing would be for the market to pull back for a couple of days before, if we could get something like a pull down here and then have the market break out. I mean, that would be optimal, and I'd want to buy here. The question will be if the market trades up on Monday based upon the strong seasonality as we have down here, that I might actually want to jump in early. So GameStop is one that I'm watching. There are a couple others that I'm looking at. I mentioned WSM. Let's take a quick look at that one. I'm trying a new markup tool today. I'm trying to figure out a way that I can actually do a better job of teaching. Now, WSM really looks beautiful here. Now, the problem with WSM, or the strength of WSM, let's get the last couple of cycles here. So clearly we've been cycle bound. We broke below the cycle here, which is a little bit bothersome, to be honest, on Williams Sonoma. So we are sitting, let me get my pen. So we're sitting here. So we come out of the channel. That's a little worrisome. But I look over to my left and I see that from March 2nd to April 10th, we've been up 9 out of 10 years, an average of 15%. The 1 year we were not up, we were down about 0.2%. We've had a number of positive cycles here. There's no reason not to expect this to continue. So WSM is another one that I'm going to look at for seasonality. And you can see earnings are imminent. In fact, we'll take a look at when their earnings are in a few minutes. But again, I'm not necessarily just looking at a one-day return. I'm trying to get an idea on my seasonality plays of over several weeks, and you can see some of that data right here. If I want to look at just raw performance and see what's moving and how well they're moving, I didn't want to do that. Let me go backwards. Sorry about that. You can see over here, only on things that have at least 8 positive and no more than 2 negative years. So 10 out of 12, 8 out of 10, 8 out of 0. You can see the return over the next 30 days. And you can see here's our GameStop right here. You can see a number of very strong potential opportunities here. Interestingly, Las Vegas Sands, the casinos have been weak, but you can see here 23%, 8 out of 10 years. We looked at GameStop. Anything else? You know, Vico is not one that I've made a lot of money on in the past. I think they're the LED company. Have to check when their earnings come out. But over the next month, 12 out of 12 years, they're up an average of 15%. I'm also playing Flowers, but I've now been in this for the better part of a week, and it has a 11 out of 12 and a 14%. It's already done very well. We'll probably look at that chart at some point. So I find seasonality to be very useful as I try and understand where I need to be putting my money. So let's shut this thing down here. We're at 22 minutes. We're doing well. Next thing I usually do is get a sense of what the market's doing by dragging my trade station into the screen. Let me just close that off. Perfect, perfect, perfect. Okay. And specifically, I like to look at the Elder plugin. And this is a plugin, meaning you go to elder.com. It wasn't much. I think it was like $300. That's not to say it was nothing. And you know, we all got our budgets that we can afford to spend. But to me, it was a very good plugin. I go to the Elder here. And let's just well, here's Flowers. I mentioned I bought it earlier in the week, and you could see, I actually bought it back here when I had the person's buy signals. It's about 2 weeks old. And I bought it in anticipation of earnings. Had a bad day on Thursday, came back some on Friday, and actually Thursday it made up a lot. I'm up nicely on the position, but probably will take profits if it doesn't open up on Monday. And had I not been on vacation, I probably would have sold it when it closed below this bar on Thursday when it opened. But let's take a look at the indexes. Remember, we're looking at the color, we're looking at the person signal, and we're looking at evidence of MACD divergence. So let's the bad news begin. Here is the NASDAQ. This was the old resistance here. We gapped up here, and you could see these little red dots above my price bars signifying MACD divergence. We were blue and went to red. We're blue on the weekly. So I would look at the NASDAQ and say it's in a sell signal all around. It's going to have to get, let's see, it's probably close to turning blue. Let me see if I can figure that out here. Crossover is at 49.87. So we're 50 points from turning blue. So the NASDAQ's got its work ahead of itself before it can get back and get out of being red. But when I see a red price bar, it tells me to expect further weakness and that it's a filter that says I should not be going long here. I don't have to short, but I shouldn't be going long. Clearly, the NASDAQ is on a sell signal with the red bar, the person sell signal, and the MACD divergence on the weekly, kicking on the daily and the weekly. Dow Jones Industrials, you can see similar pattern. The sell signal came in on Wednesday, big down day on Friday, also blue on the weekly. MACD divergences are now resolved to the downside. Clearly a signal to not be going long. Look at the Russell futures, same old, MACD divergence, sell signal, breakdown, blue here. Semiconductors, perhaps holding up better than others, but they are green on the weekly with MACD divergence, and they dropped to red on the daily. S&Ps on the future contract, breaking down on Friday, blue on the weekly. NASDAQ 100, same old. S&P in the cash market, looks like the future, and the S&P 100. I don't know what to say here except to say very weak, pretty rough sell-off at the end of the week, and we'll look more at support and resistance in a couple minutes. I don't see a lot to be excited about from the indexes, and it wouldn't, again, surprise me to see a lower open come Monday. There was some Chinese data that came out over the weekend, sort of like 7% is the new norm, where they used to have double-digit growth, and now it looks like they're going to be growing at 7%. So for those that have not been fortunate enough to make it down to my meetings, let me just give you some geography. This is the Atlantic. This is the Intercoastal. I am broadcasting this from somewhere up on the 18th floor on this building. And this building here is the Marriott that I had my June event at, and we'll probably be having another one this year. This is paradise, no state taxes and no snow. I couldn't be happier living here. I kind of came here because John Person actually talked me into it when we were just chatting. We didn't even know each other. So next thing I'd like to do is jump into my warehouse view, start doing some HGSI analysis. So I clicked on it. Hopefully it's going to open up. Here we come. There is a new update that I've been working on with George, Ian, Ron, and Gil, and it really is exciting because on my high-res monitors, the 4K monitors, I can get 3 or 4 chart windows linked at the same time. It's a little bit much for most people, but it really shortened my time to go through my 700 charts today. So I'm going to go start with the markets. I'm going to go down to my user groups, Woodward and Brown user groups, Major Markets Plus, and T1. Now, for those of you that are new to me and new to HGSI, I can't emphasize enough the strength of the view, and that this view feature here is a combination of two things. It's a combination of a filter, which determines what instruments you are looking at, and then a combo ranking module that determines how you're going to rank things. And when you get to things like the raw combo, that actually takes into account the factors that created the combo. And like everything else in HGSI, it's very user-friendly. So for example, in this combo, it is price change, 2-day and 13-day force, accumulation and distribution direction, percent AD, and percent price change in 5 days. So pretty much all of this is technical in nature. And what we use it for is to rank. I use it to rank different indexes. You could use it on stocks and industries. I use it to rank indexes. Here's the raw combo rank. It shows you the strength for on Friday ended with the dollar, gas, and volatility, and the weakness in the market was in the treasuries I mean the bonds, gold, silver, small caps. Obviously a tough week for a lot of small cap portfolios. Now I like to open up and look at my favorites. We'll start with the S&P 500. Now normally I open these up and let's see what size it opens in. Never know. Here it comes. Good. I like to open these up and look at in my dirty view, which you can see a lot of blank lines here because there's no volume on some of these indexes. And I notice that wasn't the last date. I knew there was a problem because there was no kahuna to the upside. And I noticed that we ended Friday with a kahuna to the downside and my bongo daily went green. That's enough for this view. Let's go to my more useful view here. So this is a chart that I've been watching for some time, and anybody that's been with me a long time knows that you can go back quite a while, in fact to 2009 for the bottom of this market. And you know, if you run from somewhere near the low of the market to somewhere where we are right now, you get a 214% return. So I hope that all your money managers and you got a 214% return over the last 6 years. That would work out to be about 18%, 20% return, excuse me, a 30% return, 35% return on an annual basis. Unfortunately, I know very few money makers, managers, and traders that got that kind of a return. I guess if you had put your money in index funds in the S&P 500, you'd be sitting pretty right now. We're in a big up move, and as you could see, we've had a couple of significant pullbacks. That one was about 17%. This one was about neighborhood of 20%. That was back in 11. This was the big one for this year, this past year, and we're talking less than 10%. So we've had very few corrections on this run up, and now let's make it bigger. So this is where we are right now. We broke through the 8 and the 17 day. Clearly looks like a topping pattern there. We blew through this prior resistance here. So now the question I have is perhaps this area the next line of support? And you notice that where we have this line of support, I also have my 200-day moving average. So my hope is that somewhere in this range we'll have support and we'll bounce. So it would be really nice if what we see, if you're the bull case would be for us to trade down a little bit more and then start to head up. Retest and then go to new highs. That's the bull model. The bearish case, which obviously we're going to be watching for, is to say, nah, that's not enough. And the bearish case would be perhaps that we break through this retest and then ultimately head down here to the 200-day. To me, that's where the dice run. And I really think that we have what I think is probably pretty good support right there. And then frankly, the next line of support is going to be down in this range where we got the 200-day and we got this bottom. So are we going to break back to new highs? And this now becomes resistance, and are we just in a trading range? Or are we going to break down and fall with the target being, let's clean that off, somewhere in the neighborhood of 2,000 on the S&P. Let's hope that we bounce here. So that's the S&P. Take a look at the mid caps look like the S&P, and one would hope that we'd see support here or in the zone between the prior resistance and the 50-day moving average. If I look at the Russell 2000, very similar story. We should I would think that between these two lines here, we should have some support. And if we fail that, then we're clearly going to go down and at least test the 50-day moving average. And if we fail that, then the 200 comes in play. Again, if you go based upon the market we've been living in, we are in a zone that has clearly been a place that we've bounced in this entire run-up. So that's the Russell 2000. Take a look at the Dow and the NASDAQ. Same old story, except we're now pulling back to the 50. Next stop below that is kind of down here, which will be right about where 200 is. And then the NASDAQ holding up better than the rest. And I suspect that its next level of support is going to be somewhere in this range, which correlates to the 50-day moving average. So we've got a lot of damage here just in the last couple of days. We've got clear-cut support that's close by on the S&P 500. The Dow, the S&P 500 looking much worse than the NASDAQ. So maybe we get a bounce early in the week and go to new highs, but I think we've got some clear-cut opportunities to retest some support. Briefly, let's look at some of the other things that we look at. The dollar, we know how strong it is, and let's just go to a weekly. And this is probably not the best thing to look at. What I should be looking at are dollar futures. Suffice it to say that what do we want to get? That the dollar is up to major highs. And let's look at, let's create a new, 3 years on weekly. All right. Let's see if I can look at, let's add a time frame. Let's look at time interval. Let's look at 10 years, and let's aggregate it on monthly. Do you notice we're at 10-year highs? Okay. Now let's look at, see if I can make that even more. Add a time frame. 20 years. Aggregate monthly. Select. Apply. Okay. Here we are. So, where's a horizontal line, Jeffrey? I never use the drawing here. I always use other programs. So, where are we going to stop here? Are we going to stop here? Whoops, that's not what I want. well, I'm not going to worry much about that right now. But, you know, we have taken out all the way back. This is 2002 highs. Here is as high as it went, 121. So we got a long ways to go there. So as you could see, we really broke out to multi-year highs. And I guess the way to make money on this is perhaps having puts on the euro. And you could see the euro, oh, now it works. You can see the euro is really is in bad shape here and breaking through 10-year lows on the euro by far. So it'll be interesting to see what happens with the dollar, but the dollar is certainly strong. And you know, if the dollar is strong, that tells you a couple other things. It tells you that silver and gold are probably weak, and they are. Here's gold breaking down to a new low, and silver quickly following. I don't know any reason why this is going to stop, to be honest, unless there's some reason for interest rates to not firm and for the dollar to soften. Right now, we've got the strongest economy. We're tightening. We've got rising rates when the rest of the world is weakening and loosening. So our dollar probably goes up from here and probably not down. So enough of that. Let's just look at the VIX, which popped late in the week. You can see the VIX did pop up a little bit, but it's still only a nudge and above where it's bottomed over the last couple of pullbacks. We'll see if the VIX has any power. As we've talked about multiple times, when the VIX is low, it's bad for stocks because as it rises, stocks fall. When the VIX is high, it's actually good for stocks because when the VIX falls, and you could see it spikes and it comes back, every time it comes back, it's been very bullish for the stock market. All right, so I have tepid feelings at best about the market. Let's take a look at industry group rotation. Let's go to 07. So I change here to force. And I look at the 2-day force and I go, wow, there's only 9 of my 170 industry groups actually made it to the 2-day force. I look at 2-day force down and I see it's 36. And I look at from the last 2 days, where has there been weakness? Oil and gas services, telecom, utilities, autos, utilities, MLPs, semiconductors, medical devices, chemicals, finance, refiners, renewable energy, cement, rail freight, casinos, facilities, investment companies, managed care. So a lot of the strength that we've seen over the last year are ended up on the weak side. Now, realizing that 2 days is a short period of time, I will sometimes broaden it out to a 5-day look. And interestingly, we only pick up one. I think we pick up publishing. So really, over a 5-day force period look back, this market has been incredibly weak. And to the downside, there have been 80 to the downside. You can see over the last 5 days, number one losers, REITs, followed by exploration and production. And the home builders, which I mentioned, were weak. I saw them somewhere around in here. No, they're right in front of my face. It's the funniest thing. When you're doing something live or you're recording something, things that are so easy, which are right in front of you, become so difficult to see. So let's take a look at where the leadership is, and let's look at the, let's just take a look very quickly at what we have here. Biotech. The first one is a buyout, Pharmacyclics. Strangest buyout known to man. They were bought by ABBV, which I thought had a drug in study that's in the same family as the Pharmacyclics drug. It probably means that drug was not going to make it, and also means that they're concerned about loss of revenue and profits from their flagship Enbrel, Humira. I think there's a Humira which goes generic in the next couple of years. So Pharmacyclics is being bought by AbbVie. We don't need to talk about it anymore. Kythera, big move this week on Thursday and Friday. It's a pre-clinical story. Big move up, no earnings. Puma Biotech. This one is also a no revenue, no earnings story. So it's another up on news product. But what I like about Puma, let's just go to a weekly. This thing had a big pullback and was basing some bottoming tails. It had a PSAR reversal and everything turned green on the weekly with a weekly kahuna on Friday. Don't know much about this company. It's obviously an expensive stock. But one thing to consider, you can control the price of your stock by limiting shares. So typically these preclinical companies have as much as a 2 billion market cap. So I would go here and see that its market cap, and this is blind, so I may look like a fool, $7.5 billion. There's got to be a great story to this stock to have no revenue and a $7.5 billion market cap. But that's what was up this week. Story stocks. Bluebird Bio, breaking out on Thursday and Friday. No earnings, nominal revenue. It has a market cap of $3.6 billion. Story stock. Intrexon, minimal revenue, no earnings, has a market cap of $5 billion, up this week. I think much of these stocks moved up because of speculation around takeovers, although Intrexon has been moving well. If you have Zyopharm, this is one that is tightly related to it. Intercept, I've been in and out of this stock over years. This is one of those be careful stocks, although this is probably a constructive move up off the bottom and maybe setting up for something. This was not constructive. This was destructive, especially if you were one of the ones that bought up here and got trapped on this stock and lost a lot of money as it ran up to about 500 plus before dropping back down in the 150, 180 range. So Intercept, again, a story stock, market cap $6 billion. It was $250 million the day before this run up. All of this is not on earnings or revenue. It's all on hope and glory and story. Celadon, same old, no earnings, no revenue. Big move up this week. So you've got to know the stories and know why you're buying these stocks. $500 million market cap, so that's a small one. These are moving because of news. Vertex is a combination. They have products on the market with diminishing revenue and diminishing earnings, but they've got a pipeline that's exciting. So people are pricing this, again, based upon the story. So I find it difficult sometimes to buy stories unless you have not necessarily inside information, but great information about why the story is there. Medivation, this one reminds me a lot of Pharmacyclics. They give away half the revenue on their lead product, in this case to Astellas. They have $1 billion product in Xtandi. Potential growth in their market. And I look at them as another buyout candidate. Their market cap is $10 billion. Great move up. Let's take a look at a weekly chart for a second. And you could see that this has just been on a great run. Lower left, upper right, from about 40 up to 120 since 2012. And I think it still remains a great story with great earnings growth and, from an oncologist perspective, a great drug. BioMarin, small amount of revenue, doesn't make any money. Lower left, upper right, big move up this week. So I don't know how many of these to look at. Celldex is another. No revenue, no earnings, giant move this week. And I think almost all of them are on speculation because they might have the next blockbuster cancer therapy, as well as, probably more important to short term for shareholders, is potential in takeovers. Here's Zyopharm. This is one that I own. Again, no revenue or earnings. It's a story stock. Had a Bible gap up here and pulled back, which gave an opportunity off this flag to get into the stock. Beautiful run here. Low close doji here. Be interesting to see if it can get back up or if it's going to pull back. I'm going to have a short lease on this, as I said before, very closely related to Intrexon. And you can see on-balance volume really went up at the same time it gapped up, and it's maintaining above its moving average. Story stock. Juno, an IPO story stock, broke out nicely on this week. And another one that's very similar to Juno, although not as pretty a chart perhaps as Kite, but Kite is really, I think, putting in a nice base on the 50, and it's one of those stocks that, break above the PSAR dot might give you an indication to go long. So biotech is strong, but not on the basis of operating companies' revenue and earnings, but on stories. Renewable energy, great week for solar. CSIQ had a big run up on earnings. And you could see the gap up on Thursday, gave back a little bit on Friday. Everything is green. I don't want to be a broken record, but I've been talking about this stock for a while. Now, that's not a good thing because it really has been doing nothing for quite some time. Let's look at it on a weekly basis. But what really got me excited here is its earnings per share growth, and they haven't really let us down. So CSIQ looks good. You wonder if there's something going on in solar. This is a small solar play. Big move up on Thursday as well. This is the group. SunPower, I like this one. I have a position in this one as well. And Trina Solar, JKS, probably has some resistance here at the 200. So not a lot to like on the tapes, but solar is good, as is biotech. Third group down, specialty pharma. A couple of these are ones we talk about a lot. Orexigen, there's some controversy in this name about some data that they released. The FDA is not happy with them, nor is their ASI, their big pharma partner. Big run up on the data, which showed that their weight loss drug might actually improve cardiac or heart safety instead of make it worse like others in the space. And then a big red candle on Thursday and a gap down on Friday. I'd stay away from that name, although who knows, it might move up this week. Receptos, don't know anything about it. Think biotech, no revenue, no earnings, but nice base here since for the last 3 months. Looks like it wants to take off. That might be one to watch. Horizon, this was a gift to all of us. Power of three, whatever you want to call it. We talked about this every week for 3 months as a stock with great earnings projections in a base. And then we had multiple opportunities to get in. That's the best opportunity with a mobile breakout from a squeeze, a pocket pivot at Kahuna, and a break above the average on the on-balance volume. Hopefully you took heeded my suggestion and went long on this stock as I did. Horizon looks great. And Mallinckrodt, which is the old Quest Core, continues to have a lower left, upper right pattern. Don't know that one. Next one, back. Group number 4. Banks, think regionals. PNC, we'll go through a couple, and then I'll make a suggestion. PNC, you're going to see similar findings, which is not great earnings per share growth, modest dividend yields, and making its move. Multiple pocket pivots at Kahuna, everything's green out of a squeeze. PNC Bank. SunTrust Bank, similar pattern. Kahuna, pocket pivot, mobile breakout from a squeeze, about a 2% dividend. KeyCorp, same pattern. Comerica, starting lower, has to get above the 200, basically same pattern. So what you might just consider doing is KRE, which is a ETF of these banks, which is the same pattern with the pocket pivot, the mobile breakup from the squeeze, and everything is green, and we'll let you play this. Why would you want to play these? These are various ETF sectors, and then the stocks that compose them, plus a few others that I added of interest to me from Friday. I'm going to go through this once and ask you, what pattern do you see? All right, I can tell you what I see. I see a pattern where everything looks crappy except for KBW, which are banks. My regional banks, these would be more like the KRE, and a couple of my big banks. Everything else, here's energy, are red. So my comments are, banks look good. Might be hard to pick who the winner is. Maybe you should just go with KRE. Wealth management, Charles Schwab, TD Ameritrade, E-Trade. They all take my money. They're not my traditional wealth management. I just trade through them. I don't give them money to manage. But looks like a bank and breaking out here. Pocket pivots, kahunas, everything is green. Has earnings, has some revenue. Makes money and pays just a dinky dividend. E-Trade looks a little bit healthier chart, breaking out to new highs. No dividend. And TD Ameritrade looks similar to the banks there as well. So that's another financial group that might benefit from a strong dollar and interest rates that are rising. E-commerce discretionary, you know, Alibaba being up at the top is probably as much about volume as it is anything else. So I'm going to ask you, I'm going to do this blinded. Look at this chart. Look at this chart. I think they look the same, the difference being that Alibaba starts here. You have a stock, IPO, big run up, gradual decline. Once it broke below the 50 becomes a wet blanket. That is GoPro. Now I look at Alibaba. Big run up. It's now below the 50 and it just keeps falling. I wouldn't be touching Alibaba. I don't like Alibaba. One of these days it'll be good. Not for me. eBay breaking out to some multi-year highs. Pocket pivots, rising OBV. Everything is green. Not much in the way of revenue or earnings growth. And on eBay, this is not millions. Those are probably billions. Wayfair, don't know that one. Vips is one that I'm holding now. This was a big runner over the last couple of years. Still has some pretty good earnings per share growth. China had some big numbers on YY as well. Look at the big run up. Is it going to run again? I don't know. Bought this one on a dip, so I've got some nice profits in it. Have to decide what to do with it. JD.com, another one. Kind of a slow mover here, but maybe wants to start going back up again. I know a lot of people like JD.com as well. Boy, there is not a lot to love to the long side today. Life insurance, change index groups. I do like Prudential. Don't know why, but I like the chart. So here's MetLife. And I don't know if they're a good play in rising interest rates. Here is Prudential. Why do I like it? Kahuna, pocket pivot, rising OBV, broke above the 50 from a breakout from a squeeze. Not perfect. The weekly bongo is red. Lincoln National, shooting star here. That would scare me a little bit. ING, nothing much going on there. Next one now, healthcare facilities. So these are hospitals and mental health facilities. There's been a lot of volatility in these names based upon what people think are happening with HCA. On Wednesday, or ACA rather. On Wednesday, these stocks moved up because of thoughts that ACA would be upheld. Gave up some of the gains Thursday and Friday. These are almost like arbitrage plays because it's an arbitrage on whether or not ACA, the healthcare reform from Obamacare, survives or not. Sideways, HCA, Tenet, same pattern, big move up on Wednesday, sideways the next 2 days. DaVita, different story. These are dialysis centers. Breakout above that high might be interesting. Everything's turning green. Not much in the way of earnings growth. Now we're getting into the psychiatry hospitals, I believe community health. Again, same thing, run up on Wednesday and then pull back the next 2 days. So I'm not real excited about these. Back. And lastly, publishing and broadcasting. So these are names that had a big run up maybe a year ago, and they look like they want to run again. So this is gray. Let's go to a weekly. Big run up from 12.12 to 12.13. And really a lousy 13, at best sideways, but pull back, descending, breaking out on a weekly. Shooting star like here, rising OBV. Earnings ultimately coming into the stock. Not much of a multiple, might be something to watch. Houghton Mills, Harcourt. Nice move on Friday. Good technicals, pocket pivots, and Kahuna. Don't love its earnings. Next Star Broadcasting, if you take out 1 day, looks like a lower left, upper right from this pullback in 2014. Everything is green. Good earnings per share growth in the second quarter coming. Don't love these. What I like are the ones we talked about in the beginning. Selected biotech and specialty pharma, some solar, and some banks. So what else can I do before I say goodbye? It's only an hour and 1 minute. I can talk a little bit about the group inclusion filter. I already ran it, so let's run through those stocks and see what stocks came out as making it to a lot of the better lists. And this is a different GIF than you might run because I have a lot of lists that I run it against. All right, so I'm going to go through this very quickly, give you my thoughts on the various stocks. NXP, viable gap up, going sideways, good earnings per share growth. I'll probably wait till it breaks above the viable gap up high or closing high before I get back in. Maybe it'll set up a nice flag. I'm watching that. Some acquisition activity there. Foot Locker out to new highs on a viable gap up. I'm not sure what to do with this 2 quarters out earnings, although I do recognize that in HGSI and other programs, the further out you get on projections, they're less accurate. I also want to give kudos to my buddy George Roberts, who now included dividend yield as well as earnings date on this page. In addition to that, he has put, I think, 12 quarters worth of earnings that you could actually plot on a chart. Very cool. Thank you, George. Ambarella, these guys make the chips in the GoPro, and I think is a better play than buying GoPro because they can sell the same chips to cheap Chinese manufacturers and actually make money off them instead of GoPro, which loses. I think we're in a wedge after this run up here. Not necessarily a wedge, but rather a flag. And when I can break above the pennant, I'll want to go long in this position, this play. If the bull keeps going, I think GoPro continues to lead. Avago, same story, Bible gap up sideways. I want to see it take out that high before I get into this play again. It would be great to see it go sideways for a while. Horizon we already looked at. Medivation we already looked at. Monster Beverage is doing that little flag thing after a Bible gap up. Again, I want it to break out of the flag before we get into it. Mallinckrodt, we looked at it, the old Questcor acquisition. VIPS, we looked at. Biogen IDEC, one of the big daddies in biotech. Tough day on Friday, but OBV clearly positive. A number of pocket pivots, mostly green up above. United Therapeutics, similar to Vertex, it's got current marketed products, does make money, but it also has a pipeline, a number of drugs for pulmonary hypertension, which is a horrible orphan disease. Drugs for life is a ingredients to making money as pharma. Not bad looking chart. Will be news driven. Skyworks, similar to AVGO, I like to see it show me that it's actually breaking up before I jump in. I think this one is a tired name. but it's certainly, let me back up. It's not a tired name. It's an extended stock that's had a big run that looks like it's going sideways. A pause to refresh would be extremely healthy. I won't buy it until it breaks above its previous closing high. New Link Genetics, another no revenue, no earnings play that popped this week. Tower Semiconductor, same as the last. Here we got a flag forming on a stock after a nice big run up in the semiconductor space. It makes earnings and revenue. It's a cheap stock. It has a multiple much smaller than its growth rate, which is ingredients for going up. Probably my favorite in the healthcare insurance space has been Centene. We've been talking about this forever. The only reason why it's no longer a $130 stock or $120 stock is because it's split. This is your true tight lower left, upper right leader. If I think it's still the stock to own in the space, I have a position. Valiant, Bible gap up on acquisition news. At some point, one of these acquisitions is going to be an acquisition too many, like a bridge too far. So far, it's holding its own after a big gap up on its last acquisition, which is Salix. UVE, I've never owned this stock. I know it was a darling when it was a cheap stock. Kind of takes steps up at a time. Looks to me like it's consolidating here and probably not yet ready. Earnings slowing down, pays a small dividend. Lanet, one of my favorites. Again, a bit of a flag coming in, maybe a wedge sitting here, right below the PSAR. I love this company. I love the stock. It's one of the ones I profile in my A trades. It usually revisits its 200 or its 50. In fact, they give you some more space. You can see this is a stock that ran up to 50, and it's had several good pullbacks, and these pullbacks obviously were great buying opportunities. It's nowhere close to a pullback. I'm not sure we're going to ever get another pullback here. Bottom line is, if it breaks above this PSAR dot, I'm going to add to my positions. I do have a position here. Look at the earnings per share growth. This is a healthcare stock, multiple of 18 and growing multiples of that. I think it goes much higher, one of my favorites, and that's it on the true conclusion filter. Other things that you might want to do is just put yourself on your all securities. Take a look at where the volume went. So look at these. Celadon we looked at already. This was a healthcare company, which sounds a lot like a trucking company. They're just spelled differently. Breaking out this week, no revenue or earnings. It's a story stock. And then Lifetime Fitness, which was basing for some time, and this is up on potential takeover by a PE firm. So that's enough of that. I also like to look at PSA reverses close at a squeeze, and Sienna will be, let's work up Sienna. So I've talked about this before. I just left the working world, and I couldn't be on my computer all day, and I call these my get on a plane trades or go to work and forget trades. And this is a stock that pulled back pretty hard. It's moving up again. This is a weekly, everything turning green, pocket pivots on the weekly. Communications equipment, which is not a strong group, which is surprising to see this doing as well. You can see the group has turned down. Here's the strength of the stock. Look at the earnings per share growth going forward. Trades at a big multiple, but you're going to have 41 cents replacing 8 cents. Add that 33 extra cents times a 50. You don't need 100 EPS on it. And you add $15 to the stop. I think the stock can go to 30, 35. So here's how I trade it. All right, I'm just working this up in my mind right now. If I want to set a stop based upon technical factors, I'm going to probably look right here. and I'm picking this to be as a stop because it really is the low of the last several weeks, and it encompasses this bad bar here, and in 2 days it's going to be where the 50-day moving average is. So that should be really strong support. Now the low of this day was 1981. All right. So let's do some work here. So my stop is 19.81. My buy stop will be, if it takes out the PSAR dot, which is at 21.15. So I'll say my buy stop will be at 21.20. So my risk here is a lot. My risk is $1.40 a share, which is about 6.5%. So my hope then is I can get on a plane on Monday and say, if I take out this area, actually I'm a little bit, let me erase that, start that again. I didn't realize I could do that. Okay. If I take out the buy stop, oh my God. This is a new toy, if you can't tell. I'm trying to figure out ways I can make this. There must be a way to do that another way. Oh well. Let me go back to my line. All right, so if I take out this line here, that's my buy. Here is my stop. If I can risk, say, 2,000 in a trade, then I can buy about, I can get 2,000 divided by 1.4. Let me get my trusty iPhone out. I used to be able to do this in my head. I still can, but I want to be close to accurate. So if I can risk $2,000 on a trade, and I'm going to have $1.40 risk per stock share, I can buy about 1,400 shares. So I chose my buy stop based upon taking out the PSAR dot, which would be at somewhere in the neighborhood of 21.20. That's a nickel above the dot. I put my sell, my stop. If I buy it, I'm going to stop myself out about 6.5% down, which is going to be about where the 50-day is in 2 days. And it takes into account 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. The lowest day in the last 16 days. If I break below the lowest day in the last 16 days, or I break below the 50-day moving average, I have no business being in this stock. I can set this order. I can go to work. If the market opens up big down tomorrow, stock opens up down, I never get filled. If the market opens up and starts to trade up, I'll get filled, and I immediately have a stop in play. And then I'll quickly move my stop to break even once I get up 3 or 4%. That's how I look at Sienna Corp. And I'm not saying it's going up. I'm saying that it's the type of stock that I like to set and go and buy when I head off to work. All right, anything else I wanted to look at? So that's, and let's see if there's anything else on this form. Scott's Miracle Grow also looked like a potential play tomorrow. There was a reason I like this. Let's see if I can remember why. Oh yeah, it's pulling back to where it normally bounces off the 50. And it's bounced off the 50 on Friday. And you could do a similar workup with your stop around 64, your buy stop around 66, so about 4.5%, 5% at most risk. And then I'd probably want to go look at this on my seasonality just because of what happened with Mosaic. Oh yeah, I want to go look at WSM before I say goodbye. Yeah, interesting. So it's in a nice channel. You'd expect it to go up based upon its range trading and channel bound. It's got a big green area with the 5 and 10-year performance going up. It's up 7 out of 10 years, 88%. And let's see if I can do this the right way. I mean, it's not great from a seasonality perspective. And from this point on, 10-day return averages about 6.8 to 7.4%. But I do like the fact that it's in a nice channel and in a strong seasonality period of time. Now, Mosaic is the one that I was concerned about. And look at seasonality not just on the long side. So Mosaic has been in a channel, and it's going into a 7 out of 10 to the downside, 6.5% average pullback. And I did not stay in Mosaic because of that reason. And if you look at Mosaic, which is why I said we better look at Mosaic first, Mosaic has just died on the vine. Big run up on good earnings and 4 or 5 down days in a row. Wouldn't touch this one right now. Lastly, see if there's anything on the ones that I thought were interesting from a buy perspective, and then I'm going to say goodnight and send this out to you before I go to dinner. We looked at many of these. PTX is just another biotech and pharma. Let's take a look at this one. A lot of biotech on my list, and a lot of these are stocks we've already looked at. PTX, great earnings per share growth, revenue growing, don't know anything about it, but it just turned positive in earnings in December with 43 cents coming in the next 2 quarters. It's not an expensive stock. Probably not a sexy product, a market cap of only 452 million, and its number of average shares traded is 500,000. I like the pattern. OB volume is leading and it's breaking out here on the weekly chart. So I thought that was an interesting looking chart. Yeah, I think I showed you most of the ones that I wanted to discuss tonight. Let's look at Southwest and a couple of the airlines and say goodnight. They're either setting up at a great buy point or this run is over. Here's Southwest, so you can see that on a daily chart, the weekly bongos and the daily bongos are green, forces are negative, and you notice it's pulling back to the 50-day, which would be the right place for it to bounce. It's got great earnings per share growth. Is that the end? Or is this just the beginning of another run? If I go to change the index industry group, all the ones in the group are here. Delta did not hold at the 50, rolling over from here. Delta's had a huge run, as you can see here on the weekly. I suspect it's going to go higher. The multiple is much less than the growth rate. It had those issues Friday with the plane coming off the runway in LaGuardia because of the ice. American has been weak of late, below the 50. Alaska, similar pattern as Southwest, pulling back to the 50. United on the 50. I think airlines are at an interesting position. Oil continues to drop. So one would suspect that as we go into the spring and summer flying season that the airlines will do well. I know the fares haven't come down and fuel has. I guess at this point, I'm going to say goodnight. Thanks for participating. Hope you like my new markup tool. I'll get better at it as time goes by. Just final words of caution here. It remains to be seen whether or not we've topped. It's hard for me to believe that all-time highs will be the top of this run. It's also hard for me to believe that in the 7th year of a presidential cycle, which are always or pretty much always up, that we are going into a bear market and dropping hard. It's also hard for me to believe that in a year ending in 5, where we've already taken out the January highs, for us not to continue to go higher. All these are very positive findings. The charts show a lot of weakness, but they also show that we're getting close to support. If we bounce, then put your bull cap and your buying cap back on. But if we don't bounce, remember, you have a different playbook. You have your bullish playbook and you have your bearish playbook. So when you're bullish, you can buy stocks and calls and sell puts and do cover calls and bull put spreads. But when you're bearish, you have to play a different game. And when you're a bear, then think about contra ETFs. Think about shorting stock, selling calls to raise premium, buying puts to capture the drop, and bear call spreads. A little safer than selling naked calls. A few comments about some of these ETFs and some of the ones that I like to play. And then I'm going to say goodbye. I'm not saying I'm jumping in them yet. All right, make sure you hear me. I am building a list of contra ETFs that I can look at if this market rolls. So let me show you a couple of them very quickly. I am worried about gold with the rising dollar. Here is dust. This is a contra, meaning you buy it to go long because it's a bearish ETF. Can dust go back up to 40 from here? I think it can. J Nugget, another beaten up ETF for gold, 3x contra gold. You could also look at buying puts on Newmont Mining, breaking below the 200 perhaps this week. Royal Gold also breaking down. That's not the one I want. Rand Gold breaking down here. If I want to short the major indexes, I can look at SDS to short the S&P 500, where I would be buying the contra. I could also look at a leveraged one, the SPXS. Same exact pattern, it just moves a little bit different. I could be looking at shorting the Qs. So I could do QID, which is a short of the Qs if I think the NASDAQ 100. Now again, if it's a short contra ETF, it goes up when the instrument goes down. I could be looking at FXE if I'm concerned about the dollar strength and want to go after the euro short. I can look at small cap shorts in TZA. Now I want to make a comment about all of these. And I'm going to spell it out in big letters. Contra ETFs are dangerous They are trading instruments and not investments. Manage them with stops. Do not forget about your positions. And long term, these things keep dropping and doing reverse splits. So there you have it. These are not easy to trade. However, in a falling market, if you don't like to short and you want to feel like you're going long, these are some of the instruments that I play and I make good money with on the downside. Lastly, somebody just thought of it, I forgot about it again. Let's see. Oh yeah. One more time, just suggesting you consider come to the PV meeting. Oh yeah, here's the other cool thing. I mentioned there's an update coming, so I'll show you what you can do with this update. I'm going to open up one chart here. And I'm going to make this smaller. Now, mind you, I have a much higher resolution monitor than I normally use. I'm going to open up another chart. Of course, it opened up on one of my other monitors, so as soon as it's open, I'm going to bring it over. All right. Okay, there's two charts. Now I'm going to make one of them a weekly. One of them is a daily. Okay. And I'm going to change it to be oops. Now I'm going to go up to Tools and make sure that I've clicked Link Multiple Chart Windows. So now I'm going to go AVGO. And I have a daily on the left of AVGO and a weekly on the right. I could put in Microsoft. And the speed of this will depend upon your machine. And I've got my daily and weekly are linked. Very cool. Here's the other thing that's cool. Add indicator. I'm going to put into my price bar, I'm going to add an indicator. Earnings and revenue. Okay. And I don't really want to see I don't want to graph the earnings here, so I'm going to make it invisible. I want to have earnings announcement dates, and I want to put what the value was. I'm going to hit OK. I'm going to hit OK. And notice what comes up on my chart. Every time the earnings came out and how much, and the blue dot here to remind me that that was an earnings date. Now I'm going to want to put in dividends. I think the dividend might have been here to some extent before. I just never used it. Add indicator. So you can see when the dividends came out. And you can see what impact it has on the chart. Now, the other thing that's pretty cool, and I'm going to change this to my moving average chart, and I'm going to make it edit current view, and I'm going to add make a new window. I'm going to call this EPS, and hit OK. And I'm going to come down here, and I'm going to get my earnings and revenue. Hit OK. Hit OK. Hit OK. And now, I got to find where I put it. So now, let me give you, scrunch this up and give me more data. I can plot earnings per share growth going back many quarters. Here's their dates. along with price. Cool stuff. This is on an update that you'll be getting sometime this week as an automatic update when you update your program. We're doing the final beta testing. We've had a number of small changes. Thanks to George for getting this out here. Good night, everybody. Have a great week. Hope to see some of you in Palos Verdes. Goodbye, everybody.